What's going on, everybody, and welcome to the video. In this one, we're going to be talking about Microsoft stock. Is it a buy? Is it a sell? How my portfolio is looking. We always do that quick little update in this channel. So if you do enjoy this type of content, all I ask is you subscribe to the channel and you turn on post notifications so you don't miss out on any of my future content. But let's go ahead and get straight into the video. So my portfolio over the past week is down about 0.5%, just $70. Made $8.20 in dividends over the past week, which is stuff you always like to see. Let's go ahead and kind of look a little bit deeper into it. So the passive investing, just the two ETFs right now, SPY and VU, over the past week, down about 1%. And then the dividend portfolio, whereas my dividend stocks are sitting, is down only 0.39%. So doing a little bit better than the S&P in that sense over the past week. Tech and cloud computing down 0.2%, down 0.24%. Banking, fintech pretty much flat at down 0.03%. Income fund down 0.57%. Starbucks, which is my restaurants and food, up 0.97%. Consumer stores down 2.08%, and then real estate down 2.42%. So not much movement going on in the portfolio over the past week. Just kind of looking at my dashboard. Here's kind of everything in my portfolio. If you do want to get access to this, check out my Patreon. Use the link in the description down below, and you'll get all this different information. You can get per stock performance, sector diversification. Just get a nice insight on your portfolio to make sure you are investing correctly and all that good stuff. Your dividend yield on cost, first yield, your annual income, and a ton of stuff. But let's go ahead and kind of talk about the new spreadsheet that I've built and how we're going to be valuing Microsoft today. So I will be putting this into the Patreon. Like I said, if you want to get access to this, use the link in the description down below. But today we're going to be looking at Microsoft stock. So just kind of gives you an overview of the company, kind of like a stock look, seeing everything. Microsoft's 1 year chart. This is the 1 year performance. It's down 8.2% over the past year, currently traded for $270.88. Some company metrics, some pretty nice margins. 33% profit margin is very, very good. Earnings per share this year have increased by 20%, expected next year to grow by 14.6%. They do have a pretty high PEG ratio, which is a little bit of a concern, but not the biggest concern. I'm sure you know who Microsoft is. Their forward PE right now is about 25.28, market cap of $2.013 trillion. Very big company. And they're expected to make $10.73 earnings per share in dividends over the next year. Some nice management statistics, but then right now they have a dividend yield of exactly 1% with a payout ratio of only 28.1%. Now we're going to be breaking this intrinsic value valuation into 4 different things: a DCF valuation, a dividend discount model, Graham's formula valuation, and then a multiples model. So we'll go over everything. Let's go ahead and start with the DCF valuation. So a lot of DCF models, like one of the ones that I have on my Patreon, is very complicated. It takes a lot of time to fill in. This one should not take you longer than 5 minutes, okay? It's very easy to do. You just look up Microsoft's or whatever company it is, their free cash flow. You want to type in the ticker so you kind of get some other information, which I'll show you in a second. But it'll give you the free cash flow. You have to type this in manually. Just look up Microsoft historical free cash flow. And we're going back 5 years, so we went to 2018. And as we see, this is their fiscal year of 2018, starting right here. And you just type in this data, pretty simple. And then once you have all this data typed in, just the free cash flow, it will simply give you the growth rate automatically, the average growth rate. And then you have to type in your own future growth rate that you expect the company to grow at for that sense, their free cash flow. It calculates all these different things. And once we do this with Microsoft, it gives you a DCF price per share of about $391 compared to its current price at $270, which is very, very good. Anything highlighted in yellow, you do have to manually input if you are interested in getting this. But like I said, you just type in the ticker. Let's go ahead and just act like we were doing this with Starbucks per se. I'll just type in Starbucks. The only thing that changes the price and the upside downside because it's different. Remember, we're looking at Microsoft, so let's keep it there. Let's go to the dividend discount model. Looking at this, kind of just valuing the stock based on their dividend and growth rates and that stuff. So you just have to manually input all this different dividend discount stuff. Pretty much just look at the dividends history. Just go to Seeking Alpha. It's all free. Kind of just go historically. You get all the dividend information on this company. You can see how much they've been paying and all that different stuff. For when it comes to this, all you have to do is type in the quarterly payment and then automatically multiplies it by 4, and it gives you the annual dividends. Just go back 4 years and you kind of assume a discount rate. You can simply just look up, in this example, Microsoft discount rate, Microsoft weighted average cost of capital, WACC, same exact thing. A growth rate, you want to give it a little bit, just to kind of assume a growth rate, kind of close to your average growth rate, maybe a little bit less to be conservative. But right here it's 9.25%, and you'll just see as I calculate this, you don't want your growth rate to be more than discount rate, because just for example, I'll do this in the way the formula works, it's going to be a negative number. So you don't want to do that. Let's just go with a 9% growth rate per se. We still have good upside of about 9.45%, which is very, very conservative. But in this model, I wanted to go with 9.25% just to show you that. And it does give you a massive upside on Microsoft stock of about 46.27%. And then we have Graham's formula valuation. So, how to calculate intrinsic value. Very common, Warren Buffett, Benjamin Graham, big people in this world. You just kind of do this formula. It has all this stuff typed in. If it is like this, you have to manually input this data. The average yield on AAA corporate bonds, you can look this up. It's currently 4.4% as we see as of the most recent data. January 2023, 4.4. And then we go ahead and you type in the growth rate estimate, which is the 5-year annual growth rate estimate of this company's earnings per share. So you just go to FinViz, it's very easy to use. I tried having this manually, automatically put in, but it inserted it as a percentage. So EPS in the next 5 years is 11.77%. You want to make sure this is not typed in as a percentage, just because if you do, it'll mess it up and it'll give you way lower intrinsic value than it should be. So it's just typed in 11.77 as a whole number. And as we'll see, the intrinsic value based on this calculation is $228.99. The current price is $272. And if you want a margin of safety of at least 10%, it still isn't a good value. The intrinsic value is said to be lower than the stock's current price. So based on this formula, this stock is a sell. And the last model that we're going to be looking at is the multiples valuation. So just kind of look up some competition. You simply can just look up whatever company you're looking at. Like in this example, it's Microsoft. So I just looked up who are Microsoft's biggest competitors. Pretty obvious. Apple, Google, and IBM are the three that we're going to be looking at. Easy to use. Like for example, if I want to Google right there, I'll just type in GOOG, and it'll give you all the other information that you need to get. But in this situation, we're using Apple, Google, and IBM. Give you all that good stuff, the average PE, the median PE between these companies. And then it gives you all the information on Microsoft as well. And then it tells you the average PE valuation, which simply what you do. The formula to calculate this number is just going to be, like for example, getting the valuation of Microsoft is just the earnings per share, and then on the average PE multiplied by the average PE, median PE, earnings per share times the median PE, and then the combined valuation when it comes to this is just going to be the average of these two numbers, which is $288.98. Remember, the stock is trading for just above $272 right now, which does have us a little bit of upside on this stock. And then when we come to getting the final intrinsic value and all this stuff, we're going to take the average of all four of these, and just looking at everything, we get a final stock value of $320.66. The current stock price on Microsoft is $272.24. So that is upside of about 17.78%. Okay, giving us a margin of safety of 10%. This says we should be good to buy this stock at $288.59. So overall, rating this stock a buy with, like I said, upside of about 17.78%. So based on this valuation, Microsoft stock does seem to be a nice buy right now. But remember, there are no guarantees. They're just looking at multiple valuations. These three said to buy the stock. This one said not to. So this is what I'm doing with my Microsoft stock right now. I'm currently just kind of laying low with Microsoft. Look at my Microsoft position. Right now, I own $1,255 in this stock. And I think it's a good company. I don't see them going anywhere anytime soon. I think right now are some pretty good buying opportunities just with how Microsoft has been performing, some downtrend, but recently on a nice uptrend, so I'm not adding any money right now. But that is the valuation on Microsoft stock. If you did enjoy this video, make sure to subscribe to the channel and turn on post notifications so you don't miss out on any of my future content. Thank you again for making it to the end of this one. Check out the link in the description down below, the Patreon, if you want to get access to these resources, these tools, these Google Sheets. And also check out M1 Finance. You get free $100 by depositing $100. And I will see you at the next video.